Here are my 2023 real estate predictions. So if you're contemplating renovating, investing, buying, or selling real estate, you want to hear this. While there's no way to predict with certainty, here are the trends I predict we will see in the Bay Area in 2023. Trend number 1, home price growth will slow down significantly, and 2023 will feel like a major setback. But in reality, it's the rate of appreciation that will decrease from over 20% that we saw last year down to 2 to 3% rather than a real estate market crash. We all know the past couple of years has been anything but normal. COVID pandemic surged the home buying demand, depleted inventory, and boosted prices like never before. To be clear, home values will continue to rise to some degree, but the rate of appreciation will be minimal. Trend number 2, mortgage rates will come down from the 7% range where they are now to the 5% range by end of year. This rate come down will be very slow and gradual as we navigate a recession and battle high inflation. Trend number 3, the number of transactions will continue to decline. In 2022 compared to 2021, the number of real estate transactions in the Bay Area fell 45%. That's a major decline and a key cause of so many realtors already jumping ship. This year, the number of transactions is again expected to remain low compared to the pre-pandemic years. If you think about it, it's actually not such a bad thing because less transactions means less inventory, which can sustain prices from tumbling down, basically avoiding a market crash. Trend number 4, selling inventory is expected to remain low but should increase compared to last year. It's expected to remain low because many people have secured very low interest rate loans that will prevent them from wanting to move during this time. They also have an ability to carry the loan and they can afford to hold the property through the recession because the loan cost is so low. However, sellers will continue to have life changes that will trigger them to move. For example, in 2023, the hot topic affecting many real estate decisions will be job loss. There has been a significant job loss in 2022, and it's expected to continue in 2023 as we approach deeper into recessionary times. Job loss can trigger a move depending on their financial position and their ability to carry the cost of the loan. Additionally, there are normal life cycles, such as getting married and new babies. It's not all doom and gloom. Job migration, divorce, and death that continue to keep real estate inventory at a baseline. Trend number 5, the housing market will be less competitive, slower paced, and most importantly, it will take much longer for a property to sell in 2023. Buyers will get a break from the frenzied market conditions during the past couple of years and return to a more normal sales cycle as well, and they'll be able to negotiate great opportunities. Trend number 6, there will be a huge amount of property acquisition by investors. Investors recognize the current market conditions paired with the long-term California housing shortage. Therefore, they will be scooping up properties to take advantage of today's market for future gains. And the investors aren't going to be your typical regular individual investors. It will be VCs and hedge funds that are making big money moves in 2023 in the residential real estate market too, and you should be there too. Trend number 7, multi-generational housing will be in high demand. Let's face it, California has a huge housing affordability issue. That's why many millennials and families in general will need to live together to make it more affordable. Thus, these types of properties are going to be in very high demand in 2023. And if you look at where the bulk of wealth is sitting today, it's with the baby boomers. And the baby boomers are aging fast and they prefer to age in place, which means they want to be at home. So baby boomers are getting old. They're often moving in with their kids or they're having their kids move in with them. Again, multi-generational living. So people need different types of housing to accommodate whatever the family dynamics are. Trend number 8, the demand for additional dwelling units, ADUs, will rise. This goes back again to housing affordability, housing shortage, and multi-generational living demands. ADUs can be a great solution to adding space to a property at a fraction of the cost of buying any other property and can create space to accommodate multi-generational family living needs. It's also faster and cheaper in the Bay Area to get ADU permits than get any other permit for remodeling or construction. And finally, trend number 9, there will not be a huge rise in foreclosure and other default sales. There will be some, sure, but not like 2007. Will there be short sales? Sure, but not a lot. They are not going to walk away from that equity like they did in 2007 when buyers were only putting 3% down payment. Remember, today they're putting 20% down payment. Also remember that the lending requirements were much stricter today than what led up to the market crash of 2007, so it's not happening again. At the end of the day, 2023 means if you're a seller, it means strategy and who you work with matters much more than before. It's not a bad time to sell because inventory will remain low, but just expect that a longer sales cycle will occur, and selling sooner rather than later this year will make a difference in your net gain. If you're a buyer, don't wait for those steals and distressed properties. They're not going to flood the market. Instead, you will get more time to make decisions, you will get much better deals, more negotiating power, and a longer time to close your escrow. If you're an investor, 2023 will be the most opportune time for you to make moves in the next 5 years. And if you can, focus on properties you can add an ADU to. Call me. Let's talk about real estate and strategize how to achieve your real estate goals in 2023, whether you're selling, buying, or investing.